Hey friends, and welcome to Technical Shorts with LJ, and welcome to the weekly analysis of natural gas markets. So let's see what we saw or what we discussed about the natural gas markets last week. So, so this is the green doji where the market closed on last Friday, and we did mention, the very next candle will decide the course of action because we are getting mixed signals. So basically, this green doji it was rejected from the top of the channel here, the red channel, and then it actually got rejected from the green channel as well. And then, but then we said that this particular red candle, which actually closed below 2.54, which is a strong support, and then the very next candle, closed about 2.54. So the prices are moving upwards, and then the green doji actually was a retest candle, and it actually made a higher high, higher low, which indicates the uptrend. So you know just uh, picking up from where we left, we did mention that the Monday's candle would be quite an important candle, and you can see this. It is a Mariposa candle. It's a perfect candle with minimum wicks. I mean, at the bottom there is no shadow at all, but at the top you could see a bit of a smaller wick. Qualifies more of a Mariposa candle, which is a strong bullish, which actually shows us a breakout from the red channel and entering into the green channel. And then you can see the breakout about our horizontal resistance, that is 2.7, and then we see a retest the very next day, and you can see the Wednesday's candle touching 3 point level, $3 levels. But the thing is, when you see the price touching $3, unfortunately, the bulls are not able to sustain the buying pressure, and the bears take over. So the very next day, you can see a huge red candle, clearly stating that the bears are holding the $3 region, and they don't want the price to go up. As of now, we'll see what happens in the future. But as of now, they don't want the price to hold about $3, so they have pushed it down. And then we have seen uh, again a red doji, roughly like a spinning top on a Friday. I mean, it's very very peculiar, to be honest, to see a doji on a Friday. I mean, so many instances when you see a doji on a Friday. So look at this Friday, it's a doji. Last Friday we had a green doji here, and then the Friday before, was it again a red doji? The Friday before again, there you go, another doji. Let's see the Friday. So yeah, so we have seen many dojis on a Friday. It clearly says that the market is undecided. Of course, on a bigger time frame, the market is moving upwards, saying that we have this rising floor, which is acting as a support. So the support is eventually moving higher on a higher side, but the prices are still not able to sustain about the $3, and the bears are taking the control about $3 or roughly around $3. So it's quite a market to watch out for, and we'll see what we see in the next week. So saying that, let's see what we can see for the week coming, what is it, 15th of August, sorry, 14th of August, week commencing 14th of August. So again we have Friday closing here. Now the next move again will be the next candle, as like we see from last few weeks. So if we have a candle closing, a daily candle, again this is on daily time frame here. So we have daily candle closing below this channel, then we would see the prices, moving in a south direction, or moving, going prices moving downwards. So, or if we have a candle opening on, or a Monday's candle closing above this red candle, then we have, a potential upside coming in. There is no direction at the moment on the daily chart, but let's see, what the 4 hour and the hourly charts says. At the moment here, we can clearly see that we have closed on doji, so the market is undecided at the moment. Let's put the fib and see if we can find anything interesting here. So let me put the fib here and towards the bottom, and look at the PRZ here. That is the 1.618 ratio. It's perfectly rejecting the price here. So it clearly says, the the PRZ is rejecting the price here, and as we said, that this is a very important zone. The next important zone is 2.618, which is roughly around 3.33, and it perfectly coincides with our red, red line here, you know which we have already highlighted as a target of this ascending triangle. So the fib actually aligns perfectly with our targets. The thing is, we need to see how the Monday's candle opens, but eventually, as we discussed from past few weeks, that this is basically a bullish move on a long time frame. You can see the rising floor clearly supporting the prices, and as I discussed in the previous video, 2.54 is a clear support here. Look at the daily candle trying to close below it, next day straight away about 2.54. Similarly here, trying to close below 2.54, next day straight above. In here again, this small doji I'll not consider because the body is about 2.54, but this is the body closes below 2.54, but the very next day straight above. So clear, you know indications that 2.54 is a strong support, and holding, the bulls are trying to hold 2.54 at the moment. So it clearly says that the prices are moving, towards the upside. So that's on the daily time frame. The fib is clearly telling us that at the moment 3 is a resistance zone, which perfectly aligns with this PRZ of 1.618, and the next, if we cross above this, then I think the next resistance which we get is 2.618, which is roughly around 3.33. So let's see how we do on a daily basis on that. So let's get the fib out, and let's see on the 4 hour time frame. So on the 4 hour time frame, and if you look at it, it's forming a head and shoulder pattern. I mean, at least I can see a head and shoulder pattern here. So we have the left head here, and sorry, left shoulder here, the right, uh, sorry, the head here, and the right shoulder getting formed here. Now, daily we saw it's a red doji, so markets are undecided, and we said that the Monday candle will be key. The 4 hour also sentiments are also the same. So if we have a Monday candle closing above, then it will negate, then the shoulder, basically right shoulder basically gets, right shoulder negates the pattern, because there will be, uh, I would say that the pattern is not going to be proportional because of that, and it is gonna negate the head and shoulder. So again, even the 4 hour time frame clearly says that you know we have we have undecided markets at the moment. Nothing is decided. The bulls and the bears equally trying to push the prices in, both their directions respectively. Last week we did mention, I think last week or week before last, that this inverted head and shoulder, then we saw a breakout, and then we can see the prices moving straight above there. Now we are seeing a head and shoulder getting formed here, unless the Monday's candle close above this, the the wick of the red. I mean, the red actually tried to close here, but the bears have pushed it down here, and we've trying to get a shoulder here. So if we close above, then the pattern will get negated, and then we'll see probably the prices moving in the upward direction. So that's on the 4 hour. Let's see on the hourly charts. So on the hourly charts also, you can see it's a clear formation of head and shoulder. So let's see, before that you could see a flag pattern here. So let me just draw the flag here. There you go, that's a perfect flag there. So, and then we saw the breakout, retest of the breakout, and then you can see the breakout of the pattern, and the price reached the $3. Now here you can see clearly, roughly forming a double top, and the price is moving down, and then we can see a formation of head and shoulder. Now here again you can see an interesting pattern here. So if you look at here, if you just put a trend here and another trend line here, so that actually gives us the bearish flag here. Okay, that gives us the bearish flag here, and look at that. So the prices have just come and retest the bearish flag here. So the flag is retested. So if Monday's candle closes above this red wick, which is roughly around 2.8.4, then we can negate this flag pattern, and we can negate the head and shoulders as well. If not, then we should fall down, and I am expecting the fall roughly around you know maybe roughly around 2.56, 2.5 to sorry 2.56, 2.58. I have still you know uh, optimism of the bulls holding the 2.5 zone. If we break that, then we of course have this rising floor here, which will be holding support. But again, let's see how the market behaves, and we can always try and you know do the impact analysis, how the prices are moving, and we can do our analysis based on next week's move. So let's go back to daily, and let's see if there is anything else. I think we have pretty much discussed everything in the past videos. Just to recap, this ascending triangle, breakout of the ascending triangle, we are expecting the price of 3.35, and then again we have a symmetrical triangle which also points to the same target. We have this bullish flag which I've highlighted in green, again points to a target of 3.35. So we have confluences which are pointing to 3.35. The only criteria is this rising floor, which is acting as a rising support, should hold. As long as this rising support holds, we should be looking for a price of 3.35. If this breaks, then I think the markets basically will have a sharp fall, because if you look at it, it's actually getting formed. So we have a double bottom formed here, and then from there we have the rising floor getting acting as a support. So the bulls will definitely want this to hold support, and based on that we have formed the TA pointing to roughly a target of 3.35. But we'll see how it plays out. But I'm very confident that we should be seeing 3.35 in the coming weeks. Saying that, pretty much I have covered what I think from the uh, coming week's TA, that is the week commencing 14th of August, and potentially I think let's see if the head and shoulder or the bearish. So at least at the moment we have two confluences of bearishness, that is the head and shoulder, and the bearish flag. But let's see how the market reacts, and then we can basically let's see if the flag and the head and shoulder negates. If so, we'll see what the reaction is from the bulls or the bears. Saying that, I think it's pretty much I want to cover in this video. If you find this information helpful, give us a thumbs up. Please share and subscribe to our channel. If you have any queries, please you can you can have your queries in our comment section. Thanks for watching. I'll see you in the next session.